Good evening. This is Ken Long from Tortoise Capital. It's the evening of August 8th, 2009. I want to do a quick walk through the World Market Model Detailed Report so you can see how to read it and the kinds of information you can find from it. It begins with the regional ETFs, the 10 regional ETFs. First thing I'm looking for are the 5-week rates of return. They're all green, meaning that we are 100% exposed this week. Last week we were 100% exposed. I know from another report that SPY, the market, is in bull quiet mode. We can see EFA is better than SPY, meaning that global is still stronger than the US. EFA comes in at 63, SPY at 60. Within the US, the mid caps at 64 are better than the small caps at 62, which are better than SPY, the large caps, at 60. The next thing I'm going to look at is the broad index extract, and what we do is add in semiconductors, DBC, which is the blended commodities, USO is oil, and gold is gold. Commodities, you can see, are relatively beaten down compared to the other 10 regions of the model. Let's see. Next one, we're going to look at some broad asset classes. Treasuries have been beaten up pretty hard compared to this bull market in equities. SPY represents, generally speaking, the equities. So treasuries are hurting. Real estate doing pretty well in the U.S. Commodities of all types being hurt. Inside the S&P Spider Extract, these are the 500 companies of the S&P 500 broken into those business sectors, and you can see the weak ones are, let's see, healthcare, utilities, and staples, and those are typically defensive sectors, and the discretionary ones, the growth sectors, if you will, discretionary technology, financials, and materials, are doing a little better, and that's reflected pretty much in the same sectors across the globe. Staples, healthcare, energy, and utilities, the defensive sectors are beaten down. So this looks like a worldwide, global business cycle trend right now. Currencies. Yen has been hurt bad compared to the others. Aussie dollar and Canadian dollar are good. Real estate extract, basically anything U.S. real estate has been good this week and currently in the model. So has China real estate, although it pulled back considerably this week after a burst early in the week. So that might be a buy on dip opportunity if you see a resurgence in TAO. In gold, quality has been high because the gains have been good and the volatility is actually much less than equities. However, lately they've been hurt. You can see they're in the yellows across the board on strength. And with the market making kind of a historic move off the bottom here, gold has pulled back, and that may be an opportunity for a cycling trade once we see weakness in the equities. In commodities, you can see here, let's see, oil, agriculture, livestock are hurting. The best ones are still in base materials, base metals, a little bit of energy in here, and silver looks pretty good, as does timber. Steel is probably the best commodity of all with a 62 in the green. Now these are Z-scores. These show the 10-week standard deviation scores of each of these different sectors. I'm going to save this report for a little greater detail explanation later, but suffice it to say this is a 10-week time series that shows their relative strength performance over the last 10 weeks. The 10 weeks are aggregated into that consistency rating. This just breaks it out over the 10 weeks. And what I'm looking for here generally is something that is robust compared to its other peers. Now, these are the same groups that we saw with the tabular data above, and this just gives that time series. Now, the red line in every case is SPY. So On this one, we're looking at the regions of the model. This red line here is SPY. Japan's getting crushed. Right now, it looks to me like the blue line, or EEM, is pretty solid, and EPP is this maroon line. That's not bad either. I'm sorry, the blue line is ILF, and the maroon line is Asia less Japan, and those have been dominant. In this area here, the financials, you can see, have just been superb week over week. And again, the SPY is here. Blue is on the rise. That's the industrials. That's of interest. This energy rolling over here could be troublesome for energy. This light green line is utilities. You see how bad they've been suffering, along with all the defensive sectors. Equities have been beating all the currencies. You see equities here. These are the globals. IYR is the real estate. You see how that's been dominant over the rest of the equities. The black line is treasuries. They're just terrible right now. In the commodity sector, this is DBB. That's base materials, and they've been dominant. And then inside the broad asset classes, this green line here, these are the gold miners, and they've been doing better than the metals themselves. The blue line hidden in here is gold and IAU. You can see the gold miners have been participating in some of the equity run up. I think that comes from the company value add as opposed to the contribution of the base metal. So that's how you read that score. Read that part of the report. Thanks.